Hello crypto enthusiasts, this video is going to be very informative, so stick around till the end of the video. Analysts of cryptocurrency believe at least one more significant drop is likely to occur. Cryptocurrency industry is still in danger despite recent developments in Bitcoin and other cryptocurrencies. In November, Bitcoin and Ethereum prices were over 50% lower than they were at the time. As a result, experts disagree over whether the price of Bitcoin will keep falling as it did in 2013 and 2017 when it dropped by 85.5% from its peak. We'll talk about the upcoming Bitcoin crash in this video. Please like, share, and subscribe to our channel if you're a new viewer before we start. Let's begin. Expert views. Before the cryptocurrency market begins to recover, Edward Moya, senior market analyst at trading firm Onda, predicts that it may experience another sizable sell-off. He thinks that the next 2 weeks will demonstrate whether or not the price of Bitcoin has reached a bottom. A cryptocurrency expert named Wendio thinks Ethereum still has a 50% chance of dropping below $750 from its current price. Not a bear cycle, but a full-fledged bear market. Wendio cautions that just because prices are rising does not necessarily indicate that all is well. Ethereum is currently trading around $1,500, and for me to be bullish on Ethereum, we need to break above $2,248. There's been a 50% price increase. New cryptocurrency crash. A new crypto winter, in the opinion of many, has already begun. Due to the current liquidity crisis in the cryptocurrency industry and the most recent market collapse, analysts predict that cryptocurrency prices will remain low for the foreseeable future, similar to where they were between early 2018 and mid-2020. Furthermore, even though some industry professionals believe the cryptocurrency market has reached a bottom, the majority believe prices will keep falling over the coming weeks and months. There are new worries about the macroeconomic environment, which could get worse, as well as the characteristics of previous bear markets in cryptocurrencies, which saw losses of 85% from all-time highs. Additionally, cryptocurrency businesses have cut back on staff, stopped withdrawals, and tried to stop losses, raising concerns about the stability of the sector. The crypto bear market has affected many other businesses since Terraform Labs filed for bankruptcy in May. Prior to major cryptocurrency exchanges like Gemini, BlockFi, and Crypto.com announcing layoffs, Coinbase revealed in June that 18% of its workforce would be let go due to extreme market circumstances. Celsius has temporarily stopped withdrawals, and 3 Arrows Capital, a cryptocurrency hedge fund, might be forced to liquidate. Alarms went off when the price of Bitcoin fell below $19,700. If this happens again, according to cryptocurrency expert and educator Wendy O, Bitcoin could drop below $17,600 and become dangerous. What to do now? It is crucial to be ready because the cryptocurrency market has already crashed and is probably going to do so again. Investors should be ready for market swings of up to 50% over a few months and gains of up to 15% in a single day due to the extreme volatility and risk associated with cryptocurrencies. During times of significant volatility and unpredictability in the Bitcoin market, keep in mind the following. Invest just what you can afford to lose. Use only money you can afford to lose when investing in Bitcoin due to its volatility. It's easy to get carried away when you read news about cryptocurrencies that have increased by more than 5,000% in a year, but only a small number of cryptocurrencies saw such substantial gains in 2018. There are over 17,500 cryptocurrencies available on the market, making it challenging to forecast which ones will appreciate in value. No coin can promise the same returns in 2022 due to the shifting economic environment. Because cryptocurrencies are unstable, it is possible that if the market declines, you might not be able to cover expenses like food and housing. A collapse, however, will be annoying but not disastrous for your financial future if, on the other hand, you only invest in Bitcoin with money that you are willing to lose. You can choose to hold onto your investment and watch for price increases rather than being forced to sell at a loss. This is very important. Invest in cryptocurrencies with a long-term potential. The issue of investing in cryptocurrencies is seen from a variety of angles. Some see it as a fantastic short-term speculative investment, while others want to capitalize on what may turn out to be a technology that changes the game while still having time to reap the benefits. To avoid panic selling when prices fall, keep a long-term perspective. If you intend to own the stock for 5 to 10 years or longer, a thorough examination is more likely. One could argue that the volatility of the cryptocurrency market includes market crashes. It can be challenging to pinpoint long-term winners in the Bitcoin sector. According to experts, 90% of all cryptocurrencies would be destroyed in a long-term market collapse. The identification of cryptos with the greatest potential for long-term success may be aided by long-term research. Set up emergency fund. Think of emergency savings as a financial airbag that deploys when you need it most, protecting you from monetary catastrophes. Keep 3 to 6 months worth of expenses in a bank account that is simple to get to. There is no doubt that this is a sizable sum, but it will be helpful if you lose your job or encounter another financial emergency. By ensuring you can still meet your financial goals in the event of a crypto market disaster, an emergency fund can help reduce some of the anxiety that comes with it. Make it a habit to put aside a small sum of money each month until you have an adequate emergency fund to cover unforeseen expenses. Diversify your portfolio. High-risk investments like Bitcoin should make up a very small portion of your overall portfolio. How much you decide to invest depends on your risk tolerance, understanding of cryptocurrencies, and belief that cryptocurrencies will outperform stocks. But it's important to broaden your horizons. You will be more prepared for a market downturn if you refrain from making significant investments in any asset class, such as cryptocurrencies, alternatives to Bitcoin. Due to their volatility and risky nature, cryptocurrencies are avoided by many investors. The good news for investors is that there are excellent long-term return alternatives to cryptocurrencies. Individual stock. Investing in individual shares of well-known companies like Amazon or Apple can yield handsome returns. Dividend stocks. Stocks that pay dividends could increase the return on your investment. Compared to stocks as a whole, these are less volatile. Index fund. Since finding specific companies requires time and effort, while producing good returns, an index fund is a good choice. The objective of one index fund is to track the performance of a specific stock group, such as the S&P 500. Rates. Investors seeking a dependable income stream also have the option of dividend stocks or rates. Property investment trusts, REITs, have a track record of long-term growth and own and manage real estate. If you choose to buy a fund, you are not required to select specific rates. As a result, we are unsure of whether this is the beginning of a protracted downturn or whether the cryptocurrency market will rebound. Some people predict a crypto winter, but these predictions are way too soon. The cost of Bitcoin and other cryptocurrencies may be affected right away by this. Think long-term, diversify, and make sure you have money in other assets if you're an investor in cryptocurrencies. Assets in this category could include money, property, stocks, and other things. One type of cryptocurrency should never make up the entirety of a portfolio. One last thing to remember is that we are not financial advisors. Kindly do your own research before making any decision. Okay, guys, that's all for today. If you like this video and haven't already, please like it and subscribe to our channel. Please let us know in the comments section below whether you found this video to be useful.